Furthermore, they now seek price control. Shanghai, not London or New York, is where they would like the pricing to take place. Therefore, that is a massive shift. I believe this is a contributing factor to the recent price increases in gold and silver. As for relinquishing control of capital, I don't see it happening. Honestly, I just don't see that. It seems like at first it will simply examine trade. You're fond of. Here's how it's going to work. The yuan to gold exchange rate is completely fluid right now. That could change later on though. However, at this time, my best guess is that the system will be set up such that an SGE-controlled vault, for example in Saudi Arabia, will be used. This vault would be run by the Shanghai Gold Exchange, a company that is wholly owned by the People's Bank of China, the central bank, if you will. Accordingly, this is clearly a government agency. A government agency runs the stock exchange. It's not a for-profit business like the ones we'd see in Europe. Money can be sent and received in yuan for the purchase and sale of gold. Other forms of payment will not be utilized. I understand. So I probably won't try to negotiate a different deal with Saudi Arabia if you want to buy oil from them. If that's the case, the Saudis might be okay with you paying in gold, which box will be sealed and eventually turned into Chinese yuan, if you will, in case they wish to trade it for something or something else. Therefore, China will not be the only country to benefit from this. The only condition that I can see other countries being able to meet is that all transactions involving the storage and retrieval of gold will be conducted in Chinese yuan. That is how I see it at the moment, but I'm sure more details will emerge as we go along. As far as the Chinese government is concerned, the dollar, the de facto international settlement currency, is nearing the end of its life. How much time it will take is unknown to us. It could take a year, a month, or even 10 years. The dollar's collapse, however, is becoming more apparent given the trajectory of events following Trump's election. The era of fiat currency is coming to a close. China will need to take precautions against a dollar collapse at some point. Because the dollar is the supreme fiat currency, the yuan will collapse alongside it unless she subjects it to a gold standard. When the dollar disappears, all fiat currencies do as well. In reality, it's that easy. Why? Since the value of a currency is contingent not only on its quantity, but also on its growth or decline in quantity, numbers pertaining to the money supply, and everything else that monetarists claim, but also on the confidence that your creditors have in that currency. As a result, other currencies will follow the dollar's depreciation because they are all pegged to it. Although they may not be directly connected, they are certainly tied to the dollar. As a measure of value on a global scale, the dollar supplanted gold. All other fiat currencies will follow the dollar's lead. For China, the ability to peg the yuan to gold could serve as a safety net in the event that there are plans for survival after the dollar collapse. Also, I believe they made a quick decision to open SGE vaults overseas and let foreigners participate directly in futures. Along with gold, it's got other uses. In addition, every metal listed on the futures market is included. If the dollar does indeed turn turtle and fall to zero, they have essentially taken a massive step towards protecting themselves. No, I fail to perceive it. On a currency board system, the Hong Kong dollar functions and has functioned extremely well. Oh, connecting the US dollar to the Hong Kong dollar. I'm satisfied, it has worked wonderfully. However, if you prefer, the Hong Kong dollar will need to locate an alternative currency board link once the US dollar departs. I believe that will likely be worth a lot of money. It seems like there's no other way. In my opinion, a fresh approach is required. The fact that China's operations will undergo a sea change is an excellent point, in my opinion. Right now, I think we're thinking, okay, if the dollar is really going to zero, we need to take measures to prevent it, which essentially means we need to have control of the gold. That's putting it very simply. For the time being, that is the extent of the considerations. If Chinese people are as sensible as they claim to be, I believe they have some brilliant brains on their side, especially when it comes to financial matters like credit and money. Because ultimately, they are cognizant of the fact that gold is money and everything else is just theoretical. Additionally, I believe they are cognizant of the fact that the Industrial Revolution, which they are attempting to control or profit from, is essentially a contemporary retelling of the 200-year-old British experience preceding the 20th century. especially considering that the gold standard was in effect from 1822 until the end of the war in 1914. The success of the Industrial Revolution in this country was built on the stability of currency value, which gold provided. By the time of World War I, this nation had produced 80% of the world's ships. When I say this nation, the United Kingdom is what I mean. I would guess that there were around 25 million people living there at that time, which is pretty small for a nation. Virtually, we ruled the world. That was altered by the First World War. Seriously, the world's financial hub was in London. Therein lay the strength of sound currency. It was, in fact, really. The Chinese, I believe, are charming enough to know that when the tide turns, they will no longer be able to prop up companies through increasing their debt, printing money when needed, and all that jazz. The debt thing, they've figured it out, kind of. This is especially true in light of the fact that the various regional administrations have encountered significant challenges in the past. All these lessons have been learned, but in the end, it's all about the money. Additionally, I believe they will adopt a new strategy once the dollar depreciates. In addition, I believe they will participate in the gold game. I see your point, but the regulations were drafted by the Chinese Communist Party in the 1980s, so I guess you're right. By acclamation from the Politburo, the People's Bank of China has been designated to oversee the accumulation and management of the country's gold and silver reserves. And we have to remember that back in 1983, the sort of common view, and this would have been a very strong view in China as well, was that you needed to have at least 10%, maybe 15 or even 20% of your assets. So if we think of it in terms of reserves or whatever, in gold. In 1983, you had about 19 years up to 2002 of bear market in gold. Now, this was actually a very good opportunity for the People's Bank of China, which also handled exclusively the nation's foreign reserves transactions to swap some of the foreign reserves that it was accumulating into gold. And I calculated at contemporary prices, it was quite possible that by 2002, when the Shanghai Gold Exchange was opened, and then for the first time, members of the public were allowed to acquire gold. I reckon that in all that time, they probably accumulated something like 20,000 tons of gold. They will have accumulated a lot more since then, partly because they've encouraged mining to the extent that for many years now has been the largest gold miner in the world and still is, though output is now declining. Also, they've imported doré from other nations, particularly nations like Mongolia and so on and so forth. And none of the produced gold leaves China at all. I've described it as Hotel California for gold. And also you've had this flood, if you like, of which you referred to earlier in the interview, of gold that's been migrating from the west into the east, and it's been doing it for years and years and years and years. Now, behind all this, I think there's a sort of a Marxist economic view that capitalism ends up destroying itself, and nowhere is this more evident than the value of credit in a capitalist economy being destroyed. And so, rightly or wrongly, that's what they now see. It's what motivated them, I think, to accumulate gold in the first place. And it's now, as far as China is concerned, a huge, great problem, which they need to ensure doesn't undermine them. And interestingly, when they could see that President Trump was elected, first of all, that was bad news, I think, in, if you like, global economic sense, because of his tariff policies and so on and so forth. And then when you had the Liberation Day, the first thing that happened was an announcement from, I think it was a trade office or something in China, that they were stepping up negotiations with Japan and Korea to have a free trade area with the three of them. And then the following week, President Xi went and visited various of the ASEAN nations. We're talking about the nations, if you like, in a trading bloc, a free trade area concentrated in East Asia. We are considering Myanmar to be one of those countries. The list goes on and on. Cambodia, Vietnam, Thailand, Malaysia, Indonesia, and so on. Hey, you've got all 10 of them pretty much. It's clear that trade was the topic of discussion when those terms were used. What plan do we have to address the shared issue that President Trump has brought upon us all? We need to collaborate on this. I thought that was pretty clear. What was less apparent at the time, though, was a subsequent announcement that the Shanghai Gold Exchange, or the People's Bank, as it is more commonly known, was going to open its doors to visitors from outside of China for the first time. Ever since then, rumors have circulated that a vault is set to be opened in Saudi Arabia and another one in Hong Kong. Saudi Arabia? Why? Well, okay, it's not part of ASEAN, but that's where all the oil comes from. And obviously, I think that the Saudis, if you like, would very much like to have a currency which at least holds its value when they can see, just as the Chinese can see, just as we're discussing the dynamics supporting dollar credit, basically undermining the currency. Even the Saudis, and they don't sell any oil into America at all. Number. So even the Saudis want to be part of this, and I think you'll probably get other one. I can think Thailand is quite likely. But then that was followed literally just over a week ago by the Shanghai Futures Exchange, saying that it was going to open itself up to traders from foreign countries. Banks can deal through the Shanghai Futures Exchange as is, but they have to set up a Chinese corporation in order to handle the trades. The change is that foreign banks and all the rest of it can become members of the exchange directly and trade directly on it. Now, there are two reasons for this. One is that they are internationalizing the yuan. So that is obviously going to become the Shanghai Cooperation Organization and the BRICS common settlement currency. That is the plan. So it's going to replace the dollar. That's the first thing. The second thing is that, and this is, I think, very much tied in with it, gold prices until now have been controlled in London and on COMEX in New York. That is changing. The Chinese basically are the biggest players in the physical market by a long, long way, and they want to now control the pricing. They want the pricing to happen in Shanghai, not in London and not in New York. So that, I think, is a very, very big change. I believe this is a contributing factor to the recent price increases in gold and silver.